Hello, class. This week we're going to be looking at chapter 14, which starts our introduction into managerial accounting and concepts. And this micro lecture is going to go through some of the main points in chapter 14 that I want you to be aware of. So you would have done accounting one, which is financial accounting. And financial accounting is really focused on information for external users. So investors, creditors, regulatory authorities like the Securities and Exchange Commission, um, and just other users externally of the financial statements. And they really help users make investment decisions pertaining to the company. We're going to shift in this class to managerial accounting, which is more focused on internal users. And so managers and executives within the company use managerial accounting information for decision-making purposes. And it really helps managers with planning and control decisions around their business operations. All right. In financial accounting, you looked at generally accepted accounting principles. In managerial accounting, it's relatively flexible. So there are no gap or generally accepted accounting principle rules that you need to follow. Another thing is that financial accounting, once those statements are prepared, they need to be audited to make sure that they're reasonable and accurate. Are reasonably accurate, I should say. For managerial accounting, they typically are not audited. Right? So those are some of the main differences that I wanted to point out in managerial accounting and the difference between financial accounting. Now, in managerial accounting, you'll start to get into the concept of direct versus indirect costs. And the way I like to explain this is that direct costs are those costs that you can trace almost individually to an item that is being produced. So let's say you have a factory and you're making a bike, and the bike has two tires, right? Most bikes have two tires, as far as I know. You can trace a tire directly to the bike because you know that I have this tire and this tire is going on this bike. And this tire has a cost associated with it. So this bike will have the cost of that tire, if that makes sense. So that's a direct cost that you can associate with that bike. Also a bell. Lots of bikes have bells on them. You can associate a specific single bell with a specific single bike. So we call that a direct cost. All right. Now, take for example, the factory where the bike is being built. All right. You will not associate the entire cost of the factory to one specific bike. Let's say you're building it in a factory that costs $5 million. You can't associate $5 million with that one specific bike because then you would never get that bike sold because no one is buying a bike for $5 million, right? And it just would not be right to associate the entire factory to that one specific item because that factory is being used to produce lots of different items, lots of bikes. All right. So we call the factory an indirect cost. And that could be the taxes related to the factory. It could be the rent on the factory. It could be the financing costs similar to a mortgage on the factory. Whatever those costs are associated with the factory, we call those indirect costs. Another indirect cost could be managers. So, for example, we're going to have people that are actually making the bike, right? Those people are producing labor to create that bike. And the person working on the bike, you can associate them specifically with that bike. But then there's a manager who's overseeing all the productions and who is not specifically working on a bike. But that person needs to be paid. And the cost of that person's labor needs to be associated with the bikes. But we're not going to put all of that person's labor costs on one bike. It's going to be spread across all the bikes that are being produced. and over a certain period of time. So that would be also indirect costs. The difference is when I talked about the tire, that is a materials cost, right? When I talk about the labor, that's a labor cost. And so next in this chapter, you'll get into manufacturing costs. So direct materials are those materials that are needed to build the products. All right. And then you'll have direct labor, which is the manpower or the woman power or the person power that needs to go into building the products. And then you'll have factory overhead. And again, factory overhead, which is also called manufacturing overhead or just overhead, um, includes your indirect materials, and indirect labor and other indirect costs. Right? You'll also read about prime costs and conversion costs. So prime cost consists of direct materials and direct labor costs. So if you add together your direct materials cost and you add together your direct labor costs, you will get what's called prime costs. And then you'll have your conversion costs. Conversion costs are incurred in converting raw materials to finished goods. So conversion costs consist of direct labor and factory overhead. And then lastly, what I want to touch on are product versus period costs. So as the text mentions, costs can be classified as product or period costs. Product costs are production costs necessary to create a product, and it consists of your direct materials, your direct labor, and your factory overhead. Period costs, on the other hand, are non-production costs linked to a time period and not to specific products. So period costs are expense in the period when they are incurred and reported on the income statement as either selling expenses or general and administrative expenses. So you will also read about product and period costs as well in this chapter. And those were the main concepts that I wanted to go over with you for chapter 14. As always, if you have any questions about any of the content as you're going through the chapters, feel free to reach out. Happy to assist. Thank you.